गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है। पैसा बोलता है में आपका फिर से स्वागत है। टुडे आई वांट टू टेक अ लुक एट रिलायंस इंडस्ट्रीज. व्हाई एम आई टेकिंग अ लुक एट रिलायंस इंडस्ट्रीज? In the last 1 week, Reliance Industries has been near its 52-week low of 2,190. Today it is trading less than 200 rupees above it at 2,340. Prices of crude have shot up across the world. What impact will it have on the prices of Reliance stock? Reliance is now primarily importing cheaper crude from Russia, and therefore its gross refining margins are extremely high. Overall, gross refining margins, which is based on a Singapore index, have been increasing, and definitely state owned refiners have doubled their gross refining margins. One is certain that Reliance will also increase its gross refining margins. So, with rising GRMs, does it make sense to buy Reliance? Well, I will buy Reliance only if it cracks below 2000. At 2340, it is discounting its trading 12 months EPS of 94 approximately by 25 times. I think it's too shade costly for a commodity player. It prides itself on squeezing costs and producing at the lowest cost possible and then selling it above with a fixed margin. Reliance in recent times has really invested heavily in two sectors, telecom and retail, and two of the Ambani twins are handling these two separately. So, what is happening now? If you remember, a year or two back, Mukesh Ambani sold 26% of stake in Jio to a clutch of foreign investors, including Facebook, Google, and other private equity players, and raised 1,76,000 crores. At that time, he said within 2 years the company will be net debt zero. Unfortunately, he has not kept up his commitment and made that company net debt zero. Most of us don't even remember the commitment given by Mukesh Ambani. Last week, the Reliance Industries raised $5 billion at LIBOR plus 1.5%, both in Asia and America. Primarily, Japanese and Taiwanese banks were main lenders to Reliance. But the fact remains that Reliance at today's market rates has borrowed in dollar terms at a high cost because LIBOR itself will be around 5%. Reliance borrowing dollars at 6.5% is something that is unheard of. This means that there is some urgent requirement of cash in Reliance. That is why it exercised the green shoe option. The green shoe option primarily says we are targeting an X amount of loan. If banks are willing to offer X plus Y, we will definitely take it. The bankers did offer X plus Y and Reliance took it. The amount of loan taken is up to $5 billion. Reliance felt that it wanted that money on its books because there could be a cash crunch without it. Therefore, this borrowing was arranged. This means that net debt being zero is a pipe dream and is not going to happen anytime soon. So there is going to be rising interest costs. But we need not worry about the risk of dollar loans in Reliance because majority of the earnings in Reliance of course comes from oil refining and export sales. Therefore, there is a natural hedge for Reliance when it comes to paying these loans off. But why did he borrow so much money after saying he will be net debt free? Reliance has been on an acquisition spree on the retail space. It has acquired many brands and has also launched several brands now, such as Tira, which would basically compete with Nykaa on online cosmetics. It has now launched a whole series of white label goods under their own brand name, from Campa Cola to washing soaps in competition to Lux, and also detergent powder to compete with Tide and Surf Excel. Reliance is a price warrior and has never had a successful consumer brand, and therefore the jury is out whether this will sell outside the Reliance Geo network, something we have to wait and watch. Reliance, to enhance its consumer experience, has now recruited R.S. Sodhi as the Reliance retail head. R.S. Sodhi, if you know, was heading Amul for the last 20 years and was successful in running the Amul Girl campaign, which existed even before Sodhi. So, what Mr. Sodhi is expected is to build a supply chain for white label goods and also run marketing programs to sell products from Reliance stores. We know that Reliance is a price warrior and has an image like Walmart for selling cheap goods. They do not enjoy the reputations of the Tatas based on which people will buy anything on trust. They would buy from Reliance. The motto would be trust but verify. Without verification, nobody would buy Reliance on face value. Also, they have announced that they will put the IPL free and only generate money through revenues. Because of the free distributorship, the internet version of the IPL is expected to snatch more eyeballs from television, and thus it is expected that 60% of all investments in advertisements during the IPL will come in digital format, not on the television, which would make a paradigm shift. But unless Reliance starts to pay back debt and brings himself to net debt free and then completely debt free, you will have these valuation drags. No wonder Reliance, with so much exciting business, is trading only at 24 times earnings. But if the correction continues, one can expect Reliance at around 1900, which would be an extremely competitive price to buy Reliance as a whole. Thank you for watching Paisa Bolta Hai. If you like the content, hit the like for this video, subscribe to our channel and turn on the bell notification. Kindly send this video to your relatives and friends and have them to take a look. Once again, thank you for your support of Paisa Bolta Hai.